Hello everyone, this is Ross with Market Traders Daily, and this is today's video analysis for January 24th, 2020. Today we're looking at the USDCAD, the US dollar, versus the Canadian dollar for today's trade analysis. Before I begin the analysis, it's important for me to recognize that in about 45 minutes from the recording of this video, there is some news coming out of Canada. Retail sales hitting the news calendar at 8:30 a.m. Eastern U.S. time may impact the analysis that we're having and the price for the dollar CAD as we see it right now. So just be aware of that. Anyway, diving into it here on the daily time frame, previous trend, downtrend, red trend line, measuring that with Fibonacci. 382 Fibonacci retracement level of the red trend sits down here at the blue zone, so we've already surpassed that. The 50% retracement level of the red trend line sits here at the green zone, so we're challenging that as we speak as resistance at 1.3140. 618 Fibonacci retracement level lives up here at the orange shaded area, 1.3185 or so. Happens to also be where the 100 period moving average is, all the way up here near the orange shaded area. So now that we know where Fibonacci is, we can it will help us identify some areas of resistance and support for this currency pair. So right now we're challenging that green zone 50% retracement level of the red trend line as resistance and have been for 2 days now. Significant rise a couple of days ago for the dollar CAD, but it's come to a screeching halt here at the green shaded area. Let's go ahead and zoom it in on that a little bit. Really, we could talk about two different trends here on the dollar CAD. The red trend line, yes, the downtrend, but we can also talk about the rising movement that we've seen over the past couple of days as well for the dollar CAD. So we really have two trends here that we're working with for the dollar CAD. The current rising trend and the previous downtrend. So we have to figure out which one of those directions are we going to work with. Or will we sell it in the direction of the previous downtrend, looking for the turn back lower again, or will we buy it with the current uptrend, looking for the continuation? And I think there's possibilities in both directions. If I was going to buy the black trend line or the uptrend, I'd probably want to do that closer to the blue zone as support as it tests back down to the trend line and support. You know, you look at the last two little boxes I have here. The blue box at the bottom, little period of congestion, support, breaks out, goes higher, went into a period of ranging in the black box. So if we were to take another box, let's just say somewhere in here, and I'll make that a box so it's matching what we're talking about. Let's make it another blue one. Let's get it into a hollow box here. There we go. If you were to think about the continuation of the pattern, again, buying into the blue shaded area or a dip into support would be a play within the direction of the pattern of this trend that is creating here. So really, if I was going to buy the dollar CAD, I want to do it near the blue zone on a retracement back down. I don't really want to buy it right now under the green zone because past 2 days it's held there as resistance. If we again go to our previous examples, two boxes down here, you potentially had opportunities to go short and sell at the top of those boxes, didn't you? For about 10 days, you could have sold at 30.70.75, the orange zone, and had some profit back down to the yellow zone. And again, I'm in no way saying it's going to go down. I'm just saying that's been the pattern of this trend, and that gives me some clue of a way I could play with it right now. I don't want to buy at the top. I would rather buy at the bottom of the box. Now, the risk is if you wait, it could just break above the green zone and go higher. We don't know if it'll do that or not. Of course, retail sales coming up at 8:30 could drive it right on through this green zone. We'll have to wait and see how that plays out. I am interested in the previous daily candle, the candle we see right here, the red one with the long wick on top, giving us some clue of resistance and an infusion of sell orders. You think about that kind of like a inverted hammer or shooting star candlestick, smaller body, long wick on the top, that gives you some implication of a sudden infusion of sell orders. So that's definitely something that we need to take into account today as well. Take it down to the 4-hour time frame. We saw yesterday it challenged above the green zone, was a very short-lived challenge, got right back underneath it. Now we're challenging that as resistance. So that again, once again, tells me, and this is a clear pattern of retracement and retest. Now that we're back underneath there, retesting 3140, the expectation is that we may see it take that little bit of a dip back down to the blue zone in the bottom of that pattern or box. And that's kind of like what happened right here. Let's just highlight this area right here where the red circle is, where it got above, hit the blue zone, came back down, tested under the orange zone, and then went back down to the yellow zone. If you think about that, getting above the green zone, back underneath it, testing underneath, and then falling would work well within that similar pattern. So that's what I'm looking at today. I'm not really looking to buy underneath the green zone, but I may be looking for a short opportunity back down to the blue zone where we could eventually buy it again. But right now, not looking to buy under the green zone. Potential shorts down to the blue zone become our intraday opportunity for the dollar CAD.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.